Welcome back, everyone. In today's video, we're discussing the quarter 4 delivery numbers for Tesla and Rivian, both of which reported this morning. So let's get started with Tesla. Tesla's stock is flat today, so is that good news or is that bad news? Let's see. The expectations for Tesla were for 473,000 vehicles in the fourth quarter. According to 14 analysts, what did Tesla do? Tesla reported sales of 484,507 vehicles. So that is a solid beat from 473,000 to 484,000 vehicles delivered. Solid beat. And that is also up. So that is a record. That is up from the quarter 3 number of 435,000. So they went from 435,000 units to 484,000 units. That is a huge jump quarter over quarter. It's a new record. And this also includes the Cybertruck. Now, the one kind of downer for me personally is that they rolled the Cybertruck in with the S and the X into other models. So we don't have Cybertruck split off. It's just other models. It is what it is, but I wish they give us explicit Cybertruck numbers. But we don't have that, but it is a solid beat. And it says here, fourth quarter, Tesla produced approximately 495,000 vehicles, delivered over 484,000 vehicles. In 2023, vehicle deliveries grew 38% year over year. Production grew 35% year over year to 1.85 million. And Tesla also beat their guidance for the year of 1.8 million vehicles. So it's a beat. Slight beat, but still a beat, which is good. It beats their previous years where they would usually guide high and deliver low. So they're doing better in that respect. The one other thing for Tesla is how are they going to get back to the 50% CAGR that they were promising? I don't think they will. I think it's going to be permanent now that they're going to be below 50%. There are other upsides that are coming. For example, energy is doing really well right now. Robotaxi will hopefully do really well. FSD will hopefully do really well. Those will bump numbers up higher than these 30%-ish numbers. But vehicle sales are below 50%. Moving on to Rivian. But before I get to Rivian, Shamao, who's both here and here, says to like and subscribe. Now also on my personal expectations for car sales, I actually expected Tesla to deliver 1.8 million cars in 2023. So it was about my expectations. And honestly, for this number, I kind of cheated. I just took the number from Tesla themselves. I also estimated an average selling price of $41,319 with an auto revenue this year of $74 billion. And we will see in a couple of weeks whether this holds or not. I'm also expecting sales next year of 2.45 million cars. We will see in a couple of weeks when Tesla actually does their quarterly report. Also on my Patreon, I have the Tesla valuation model. And this is actually a page for my Patreon that you can see. This is page 5 of 9 of my auto valuation model. And you can see these are my expected auto sales going from 2023 all the way to 2032, where I'm expecting them to barely exceed 18 million units per year. Now, if you want to see how I get to these numbers, just head on over to my Patreon. You'll see it there. Also, my Patreon is a robotaxi valuation model. But heading off to Rivian. Rivian declined 10% today. Is it warranted? Let's see. Rivian. The company said it delivered 14,000, little under 14,000 vehicles from October through December. That's actually down 10.2% from the third quarter of 2023, but in line with Wall Street's expectations. This is primarily why the stock is down, is they missed, they're selling less last quarter than the previous quarter. They produced 17,541 EVs, so there's a 3,500 vehicle gap from what was produced to what was delivered. So that indicates there's a possible demand issue for Rivian's vehicles. And actually, honestly, some of these are probably Amazon vehicles. There's actually photos online of a bunch of Amazon cars, vans, just waiting to be delivered because Amazon's facilities don't have the charging stations for those vehicles. So Amazon's got to get that figured out. On the plus side, Rivian is expanding sales now to other companies. I think AT&T is tapping them as well. So they're no longer just doing Amazon for their vans. Rivian produced 57,000 vehicles for the year. It's only got one factory right now, which is in Normal, Illinois, and it topped the guidance of 54,000 vehicles, which is good. It's good. See, the thing is, Rivian did really well the previous quarter. Q3 was a really outstanding quarter for Rivian. So quarter 4 is going to be difficult to keep up with quarter 3, but it still declined 10.2% from quarter 4. Okay, the rest we know about. There's a couple other things to discuss about Rivian other than just the vehicle sales, and that's their liquidity and their cash issue. Now, the thing about Rivian is in their last quarterly report, they reported that they have $9.1 billion in cash and short-term investments. And that's actually not that much money because they're burning $1 billion a quarter. Let's actually go to their cash flow statement. So on an annualized basis, actually let's go to quarterly. So quarterly, they burned $1 billion last quarter, $1.6 billion the quarter before that, 1.8 the quarter before that. So the number is improving significantly. That's great. That is excellent. The number is improving. But they're still losing about $30,000 per vehicle, and they need to fix that. They need it to be gross margin profitable per vehicle. So yeah, they are. Last quarter, they lost $1 billion in free cash flow, and that was primarily the improvement. Actually, quarter over quarter and year over year actually is a reduction in capital expenditures. And this kind of helps to explain why their production isn't scaling as fast as before. It's slowing down a little bit, and they're also delaying their R2 next generation vehicle due to these cash flow issues, due to these cash issues. So you can see that CapEx is slowing down. That's one of the reasons that Rivian thinks they're going to be cash flow positive by the end of 2024. They actually know, I think, two reasons. One's decreasing CapEx. Another one's going to be increasing sales of their vans to outside customers other than Amazon. And so yeah, it says the good news is that Rivian reduced its gross loss per unit delivered quarter so far. This is the last report. The company said it expects to achieve positive gross profit by the end of 2024. That's this year. So if they can achieve that, that would be a significant milestone. So they got to improve their cost per vehicle by $30,000, either by raising the prices or by decreasing costs. They got to fix that $30,000 gap. Let's see if they can do it. They honestly, I think they need to scale, but they seem to be having demand issues. So I don't know if scaling is going to help that much unless they can reduce prices. It says here that Rivian's racing against the clock to achieve positive free cash flow, so it doesn't have to rely on cash from the balance sheet to grow its business. Now, the thing that they also note is some CapEx things. They originally forecasted $2 billion in 2023 CapEx, but they cut that to $1.1 billion. So they cut their CapEx in half. And that part of that's due to the delay of the R2, which is actually here. The R2 platform has been delayed until 2026. And the article also mentions that Rivian can always turn to the capital markets to raise more cash, and yes, they can. But that's expensive right now. Hopefully, interest rates will be able to improve by the time Rivian needs to go to the capital markets. Because right now, cash is quite expensive, especially for companies that are sort of a little troubled, which is Rivian's current situation. But yeah, I hope Rivian makes it, and I hope they do well. They can make it. It's gonna be, I think it's gonna be sort of like a razor wire that they have to sort of navigate across. I wish them all the best, and I wish you all the best. Happy New Year, and thank you for watching, and I will see you in the next one.